First, Polish businesses start losing money due to natural gas cuts. Good news for currency traders as zloty to euro convergence heads for a delay. Better times for new car dealers in Poland, as used car sources may dry up. Welcome back to Business Poland. I'm Roman Młotkowski. And yes, we will talk about cars later. Used ones imported mainly from Germany and its influence on new car sales in Poland. We'll speak about currencies. Yes, later, because we'll start with energy. Russia-Ukraine trade war over gas is affecting some Polish businesses. Poland is not in as bad situation as Slovakia, for example, but we do have a problem. Let's see this story.
This week in Poland, temperatures fell below freezing, but that wasn't the only thing falling. So was the pressure in the natural gas pipelines headed from Russia via Ukraine to Central and Eastern Europe. This wasn't due to a leak, but rather a battle between Russia and Ukraine over prices of the commodity. Poland was partially cut off from Russian gas supplies on Wednesday, and right after that, the primary Polish gas importer, PGNiG, reduced deliveries to a few of Poland's largest companies, such as PKN Orlen and the nitrogen plant in Puławy. For the moment, we don't have any problems with production. We're in touch with PGNiG, and we have certain procedures to adapt to the limited gas supplies. However, smaller companies don't seem to be so comfortable with the situation. This small company from Tarnów in southern Poland manufactures bricks using gas in the process. If the gas supply is reduced, so is their production. I really don't want to talk about the loss. Surely it will be over several thousand zloty per day. According to some experts, the entire economy could suffer in the wake of the gas crisis. Companies are the ones that are losing out. When they can't produce enough products to meet customer demand, customers look elsewhere. But apart from these examples, the Polish economy doesn't seem to be too exposed to the gas crisis. It's more prepared for this situation than, for example, Slovakia, where authorities were forced to declare a state of emergency due to the nearly complete reliance on Russian gas via Ukraine. Here are the countries that depend on Russia for gas. Poland relies on them for about 47% of their needs, Slovakia 98%, Czech Republic 80%, Slovenia, Hungary, and Austria around 60%. Germany relies on Russia for 42% of its natural gas. And the Polish government seems to have learned a lesson from the crisis. As the Polish Deputy Prime Minister underlined in his parliamentary debate, the country needs to adopt alternative sources of energy, not only diversification of gas supply. This year seems to be perfect for us to renew our energy policy. The purpose is to push reliance on domestic resources. We should consider nuclear energy as well. What's unclear now is when exactly the gas services will be restored. Also unclear is what the countries stung by the shortage will do. Many wonder if this will be the push that Europe needed to convince the countries to diversify energy supplies and to adopt a long-term roadmap to switch to alternative energy technologies.
Fortunately, gas shortages did not affect residential customers, as this week was particularly cold, with temperatures dropping to -20 Celsius, which would be about -4 Fahrenheit. But what is ahead of us? How is Poland going to react to this new level of uncertainty in gas supplies? I discussed that matter with Michał Swój of KPMG.
Some companies are trying to diversify in some ways. For example, Puławy, which is the largest gas consumer in Poland, almost 7 to 8% of total consumption of gas in Poland, almost 1 billion cubic meters. They are going to invest in a gasification unit which could provide half of their supply needs. At the moment they work for feasibility study.
So for making gas out of coal?
Yeah,
black coal. Mm-hmm. And we're very much political in this conversation, but definitely Poland is in a better situation than Slovak Republic, for example, which is fully dependent on Russian gas. How long it would take, how bad the situation would have to be that we would start discussing economical impact of Russia-Ukraine rift in Poland?
In fact, what we have now, it's not good for Russia as well, because it looks like Russia is not credible partner and gas provider for Europe, which could result that many countries will think twice before they sign a contract or enlarge their dependence on Russia gas, and probably some other sources of gas like LNG or Africa gas will become much more important now, just to have this diversification of gas supply to Europe.
That was KPMG's energy specialist Michał Swół. Now let's talk about, no, not about cars yet, about currencies. Zloty should be in ERM2 mechanism, preparing Poland for switch over to euro within mid-2009. But doubts are growing. Why? Let's see the story.
2009 is supposed to be the year that Poland enters the so-called waiting room of ERM2, seeking approval for euro adoption. But members of the Polish government and the Polish Central Bank are starting to show their doubts. Introducing the euro in Poland very much hinges on entering ERM2. To me, it's not likely that 2009 will be a good year to do this. Because entering ERM2 means fixing the zloty to plus or minus 15% of the value of the euro, which could be risky and expensive. However, the government leaders are starting to accept that fact. Poland's Vice Minister Waldemar Pawlak reiterated that adopting the common European currency must be done, but that Poland shouldn't be in a rush. The most important thing is that Poland is headed for the euro. The when and how part are technicalities that we must be flexible and patient with. For now, it seems like a sign that Poland's plan for entering the eurozone may change. The deadline that the Polish government originally set back in September of 2008 is still the deadline. However, the president says the deadline won't be kept. There's no question or problem with adopting the euro in Poland because that was part of our EU accession agreement. The only issue is when, and I stick by my previous statement that 2012 is not a realistic date. The skepticism of the Polish president and the heads of the National Bank of Poland and government leaders are much different than those of business leaders, many of which want the euro in Poland as fast as possible. From an economic standpoint, we need to keep 2012 as a goal to adopt the euro in Poland because fluctuations in currency can hurt our exports. That's the biggest risk we face right now. Entrepreneurs and economists say that the risks of currency exchange outweigh the risks of adopting the euro, even in a time of slowdown. If Poland waits longer for the euro, then Poles will have to be prepared to lose more time and risk an unfavorable situation later on and be unable to meet the Maastricht criteria. It's worth mentioning that Polish exporters have a more favorable situation because the euro is now stronger against the zloty than it was just a few short months ago, which is important in a time when Poles see the global slowdown in neighboring countries. But according to a report made by the NBP, National Bank of Poland, the euro represents stability, which is supposed to be the biggest advantage of switching currencies. In my opinion, the profits from euro convergence, that is, a higher pace of GDP growth and financial market integration, outweigh the costs of the change. The pros and the cons of the current situation are set to be explained in a report released by the Polish Central Bank, NBP, in the coming weeks. It will seek to advise Poland's leaders which direction to take. So for now, it seems that the fate of the euro in Poland is still in the hands of the politicians.
Delaying eurozone entry is bad news for many, but a good news for those who trade and speculate on currencies and those who trade and speculate on used cars. And we'll tell you how big the impact on the car market in Poland they have. But that in a moment, because first we go to Warsaw Stock Exchange to Błażej Karwowski to see how the market was performing this week.
After logging their worst annual performance on record in 2008, Polish stocks recovered. In the first week of the new year, the blue chip WIG 20 index gained 1.54% to close at 1817. The broad WIG index gained 1.66%. This week marked a recovery for KGHM, the largest copper miner in the region, gained a massive 16.3%, tracking a surge in copper on global exchanges. Next week, investors will be looking for an answer whether we can sustain growth or are going to start to slip back to the levels seen in October last year. That's all from the Warsaw Stock Exchange. I'm Błażej Karwowski.
And finally, the reason why we're here at a used car dealership. What will happen with the new car sales in 2009, taking into consideration that zloty is not that strong anymore and imports from Germany, imports of used cars, will probably go down.
Against the background of global problems in the auto industry, Poland seems to be an exception, with a surprising rise in sales of new cars. In December, almost 30,000 cars were sold in Poland, over 9% more than in November and over 11% more than a year ago. December was only slightly worse than March, which was the best month of 2008. 2008 was also profitable for the industry with over 300,000 cars sold, an increase of over 9% compared to 2007. In Poland, the market leader is Toyota with 11% of the market share. Skoda owns 10%, and close behind are Fiat and Opel, both with 9%. VW and Ford have around 7% each, and Renault has around 6% of the auto market in Poland. Industry analysts say the surge in December sales was partially triggered by the expected rise in prices caused by a recent increase in the excise tax for cars with engines over 2 liters of displacement. Compared to 2008, these increases are anywhere from 3 to 11%. In addition, new cars have become more attractive due to better offers made by the dealers looking to clear previous year's inventories. Right now you can find a sweet deal and get a new car for a great price. But new car sales weren't the only ones seeing an upward trend in 2008, so were the used cars. According to data from the Polish Ministry of Finance, the country imported around 1.1 million used cars in 2008. That's 100,000 more than in 2007. At the moment, used car sales have begun to cool off. And as an example, in this used car lot where there are 650 used cars, the owner normally sells in 1 month around half of them. Now, he's only selling a fraction of that. It's a lot harder now to attract clients, but we're adding things like technical inspection, warranty, and amenities. The analysts expect auto imports to Poland to slow and the prices to increase in 2009. This year we'll have the opposite situation in Poland, where imports will actually decrease 20%. And buying used cars from Western Europe will become less attractive due to a weakening of the Polish zloty against the euro. And now, with possible new regulations in Germany where Poland gets most of its imported cars, there may be a new incentive to clean up the country's autos by granting German citizens €3,500 to scrap their cars older than 10 years. Cars that may otherwise have been sold in Poland.
And that's all in Business Poland today. I hope you'll join us next week to see what's hot and what's freezing in Polish economy. Meanwhile, stay tuned to CNBC.